Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, December 20th, 2022. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Here's a look at the daily time frame of the ES. We had a little bit of a bump higher off of the lows of the day. That rally here has held over the last few hours here, and we have a little bit of a developing tail at the lower end of the range so far. If it can become a strong enough low here, we could see potentially a little bit of a relief bounce here, maybe a retest back toward the 3920 key level or the 3900 previous month's midpoint. Even if we do bounce into that zone, though, after breaking here recently, that could offer an opportunity for bears to defend and extend this move to the downside. So keep in mind right now, the fact that we have failed back below 3920 is important. 3920 is this key level right there, and that's the midpoint of this key range, and it had held above that zone for the better part of a month and a half or so. A failure there opens up the next level down, which is all the way here at 3639. So even if we pull back into that zone, 3920 could still become an opportunity to sell for a continuation across the lower half of the key range into 3639. So failing at the previous month's midpoint would open up the previous month's low. That's going to be around 3700. So somewhere between 3639 and 3700 could be the next downside targets ahead. Right now, any bounce could still be sold until proven otherwise. If we take a look here, one last thing, if price can get above 3860 today, that could open up a short-term rally ahead. Right now, given the downtrending price action, not really expecting that at the moment, but above 3860 begins to open up the upside. Taking a look here at the NQ, you'll see right here, downtrending price action, big time rejection off the 12250 level. Very similar to the ES here, this one has broken down below the midpoint. This one is the this is the midpoint right there. It rejected off the midpoint here and is now broken all the way, or returned all the way back to the bottom of the key range. So there's your key range low, 11.068 half. Today's low is 11.043 half. So it got the bottom end of the key range after rejecting the midpoint here. Again, watching to see how price responds here. Even if we bounce a little bit, we could be looking at additional weakness down toward 10,600 up ahead. If we take a look here at crude oil, right now crude oil is up just over 1% and is trading within a narrow range here over the last several days. This thing continues to trend down overall. You can see here, this is the last several days, 1, 2, 3, 4, 5, 6 days in this narrow range right here. If you take a look at a 6-day narrow range, it gives us the amount of energy that's built up in this range right now, and at the moment we're looking at 47% of ADR with the potential to see a move as much as 9 to 11.5 points of range up ahead. So the average would be 9 points. You have 11.5 in terms of 125% of ADR. So we could be looking at a big time move ahead. Even if this thing falls short, maybe we don't get 9 points, maybe it's a 7 or 8 point move. So whenever we do see a breakout from this 6-day range here, we could be looking at a significant continuation ahead. Keep in mind, we are trending downward. This is the downtrend that we've seen. This is the longer downtrend we've been within. So if we push higher and fail and leave behind a strong tail, we could be looking at projecting lower from that tail. So say for example 78 rejection, you look down 8 or 9 points and you're going to get about 70 to 69. That's very similar to what happened back here. You bounce, you get a strong tail, strong rejection, and then you get the primary move this way. So if we push higher a little bit and find rejection, that could be an opportunity to sell up ahead. If we take a look here at gold futures, gold futures continues to trade within its range here, 1780 up to 1830. That's been the range over the course of this month. The black dotted line here is the previous month's close price that has been bid so far. The previous year's close is that blue dotted line, and we've been battling between those two lines here the rest of the month so far. If we do see a failure out of this range, say below 1780, that would open up a return back toward 1700. Pushing through this level opens up 1880 up ahead. As of right now, it appears the market wants to stay right inside this range until proven otherwise. Lastly, taking a look here at the YM. The YM is down just a hair here, down 17 points, and has pulled back to yearly VWAP. This higher high failure was significant right here. It also coincided with a key level up above 35,000 even. We've already pulled back here, trading 32,950 at the moment, right at yearly VWAP. Also, price has failed back below the top of the key range. This is going to be very important here. So if we back this out just a little bit more here, this is the top of the key range right there. That is 33,435. The midpoint is right down here, and that's right around 31.5. So to fail at the 33,435 level is important and would suggest a continuation to this line right here at about 31.5. Any bounce could still offer a selling opportunity for a continuation down in the weeks ahead. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.